Hi, my name's Ollie and welcome back to my channel. In today's video, we're going to go over why retail investors lose money when trading CFDs with Etoro. If you enjoyed this video, then I'd really appreciate an early thumbs up as it really helps the YouTube algorithm, and please consider subscribing to my channel. Please note the information in this video is not intended to be investment advice, and if you do want investment advice, you should seek a licensed professional. Also, past performance is not indicative of any future results. Now, I'm recording this video as at the 10th of January 2021. Now, this information is correct as of today, but could quite easily change tomorrow, so I advise you to please do your own research. So let's just clarify what a CFD is. So what is CFD trading? So if we have a look here on the Etoro website, CFD trading is a method that enables individuals to trade and invest in an asset by engaging in a contract between themselves and a broker instead of acquiring the asset directly. The trader and the broker agree between themselves to replicate market conditions and settle the difference amongst themselves when the position closes. CFDs, short for contract for difference, offers traders and investors the opportunity to profit from price movements in the financial markets without owning the underlying instrument. So basically, you don't own the underlying asset, but with it you can get some additional functionality that is not present when you hold an asset directly. So trades that can use CFDs are currencies, commodities, indices, stocks, and some crypto exchanges, by which I mean trading Bitcoin to, say, Zcash, basically the equivalent of an FX trade, but with crypto. And there's a couple of easy ways to tell if you're trading a CFD on the Etoro platform. So if we have a look at my virtual account here, so if we were to go to everyone's favorite stock at the moment, Tesla, and if we press trade here, you can see there 1x leverage, you are buying the underlying asset. So that is not a CFD. But if you start changing that to a multiple leverage, you will see that now it says it's a CFD trade there. Other things on the platform like commodities, you can sometimes tell up here as well, it will say there. And if you've already taken out a trade, you can also tell by looking at your portfolio. So I took that trade out in 2017, you can see there it says CFD on the end. So if we look at this page here, which is an Understanding CFDs page on Etoro, it goes over the difference between asset ownership versus CFDs. I'm not going to go through this completely here, but I'll leave the link to this below this video. Now, there's a couple of things here that make them inherently more dangerous than trading actual assets. Firstly is going short. So the thing is with shorting, you're betting on the market going down. Now, if the market does go down, you will make money, but if the price of an asset goes up, then it can go up indefinitely. And so that's a very easy way to lose your capital. But I suspect the main reason that people lose their money with CFDs is because of leverage. So if we have a look here on the Etoro page, we can see what is leverage trading. Now, trading with leverage means using capital borrowed from a broker when opening a position. Sometimes traders may wish to apply leverage in order to gain more exposure with minimal equity as part of their investment strategy. Leverage is applied in multiples of the capital invested by the trader, for example 2x, 5x or higher, and the broker lends this sum of money to the trader at the fixed ratio. So while this is a good opportunity to potentially make more money, it's also a double-edged sword in that you can also lose more money as well. So this is why leverage is dangerous. So let's just go through an example here. If you're starting out and you come along to Etoro with $1,000, a good return on that $1,000 in a year would be 20%. Now, I know there's been mental gains in 2020, but a general good year of return is 20%. Now, 20% of 1,000 is $200. So if you divide that by 12, the returns you're getting each month is $16.66, which is not that much. Well, it's not that much where I live anyway. So if you're just starting out, you may want to make money a lot quicker than what you currently are, which is what a lot of beginner traders expect, that they can make money overnight. So you may stumble across this thing called leverage, which, if we look at this web page here, it says the best way to understand leverage is through an example of how it affects your profit or loss potentially. If you trade with no leverage at all and invest $1,000, for every 1% move in the market, you can gain or lose $10, which equals 1% of 1,000. In comparison, if you're to invest the same $1,000 and trade using times 10 leverage, the dollar value of your position would be equal to $10,000. So 1% of 10,000 equals $100. So for every 1% move in the market, you can gain or lose $100. To be fair, if you're trading with one-time leverage on a CFD asset on the Etoro platform, you probably won't notice any difference, as CFD assets traded without leverage have the same risk as trading those actual assets directly. So now if we come back to my example from before, I've added a column for 10x leverage. We'd now have the equivalent of $10,000 by using 10x leverage on our 1,000 invested. 20% of that would be a $2,000 return, or $166.66 a month. Now, while this is great, you could also lose $2,000 and you only came in with 1,000. So I'm pretty sure Etoro would jump in and stop the trade before you ended up with a negative balance, as they have some kind of thing called negative balance protection, if I'm correct. So if we look here, it basically says you can never lose more funds than you have deposited into your Etoro account. Don't quote me on that, because this could change at any point, and there may be other scenarios where you could lose more money than you have deposited. But from this page here, it seems to suggest that you can't. But if you want to learn more about leverage, then I've actually got a video dedicated to that whole subject. So I'll post a link to it up here or up here, and then down below in the description. So Etoro definitely appeals to beginners because of their copy trading. This is definitely what got me into the site, as I had no idea how to trade when I first got onto the platform. Now, we've already described what can happen with people who are starting out and they may want to make gains quickly. And so people could quite easily start dabbling with instruments that they don't fully understand, which could result in losses for them overall. Also, as Etoro is a social trading network, people are likely to see others posting impressive gains and may look to try and replicate these gains when they're starting out. So one of the easiest ways to get those gains or those results is potentially by using leverage. But something to remember, if you are just starting out, I can guarantee that these same people who are posting their impressive gains will not post their insane losses also. So if someone's taken a risk and it has paid off, well, fair play to them. But there is a very good chance that they've also lost money along the way also. Or if they haven't yet, then they may even do in the future. The secret is really in investing rather than trading. Also, if you're starting out on the platform, you may be looking for people who have the most amount of profit in recent months. And these people that you're looking to copy may have 2, 3, 400%, I don't know. I'm just throwing figures out here at the moment. Now, some popular investors with high percentages of profit may use leverage. And this is something you should question when looking at someone with high amounts of profit if you're thinking of copying them. Because if you decide to copy someone who is using high leverage trades, then you will also copy those high leverage trades. Luckily, you can get a bit of an idea of this before you decide to copy someone by looking at their portfolio and drilling into whether they have used high leverage. For example, if you wanted to see if someone was using leverage before copying them, you could search for them. So if we just look at Liam Davies here, go to their portfolio here, and if you drill into any one of these, such as gold, you can see there he is actually using ×2 leverage on it. So it's something to consider before copying someone. Also, luckily Etoro assigns a risk score to every user on the platform. So this should help you to devise whether someone is potentially a risky trader to be copying. And unfortunately, the people with the lower gains are likely to be the safer people to copy. Also, another problem that potentially lies around this is that popular investors get paid based on their assets under management. So they will want to perform well to get more people copying them to then get more money in the long run. And if you're starting out, the way to get noticed would be to get high returns. And if they're starting out, they may take a little bit more risk than someone who is already established and been on the platform a long time, such as say Jay or Wesley. So they've already got thousands of followers. So if you are looking to copy someone, you've got to do your own research and don't just do it based on gains. If you want to learn more about copy trading and how I begin to find the people who I want to copy, then I've got a video which I've done on that subject, so I'll place a link to that either up here and down in the description. Now, one of the other problems that if, say, someone has already lost some of their money by trading CFDs, it's harder to actually recover that. So this is probably going to play a part in the statistics. So if we look at this example here, for example, if we start with $1,000, and then if you lost 50% of that, then you would be left with $500. But now, if you want to get back to your $1,000 that you started with, you need to make another $500. So that means from here, you need to get 100% gains on your $500 that is left over. So another reason people may lose money when trading CFDs on Etoro is down to the fees. So if we have a look here, if I go to trade gold, which is a CFD, if I press trade here, and if we set the amount to say 1,000 and put the leverage down to 2 times, you can see the overnight fee is 16 cents and a weekend is triple that or thereabouts, and so that's 47 cents. But obviously the more leverage you use, the fees goes up. So if we times that to 10, that's now 79 cents daily, and a weekend is $2.37. And if you go 20, it's going up again. So this is something to definitely bear in mind. I do actually, surprisingly, I do also have a video all about fees on Etoro, which I will put a link to up here and up here. I might as well just call this video Ollie's links to all his other videos. I'm going to run out of videos to do eventually. So basically, you've got to decide for yourself, is what you're investing in worth the risk? And my personal strategy has always been to only invest what I can afford to lose. With more risk will come more reward, but there is also a greater chance of losing your money. And you've got to remember, if an asset can rocket up quickly, it can sure as hell come rocketing back down. And also, if you're starting out and think you're going to make money overnight, unfortunately the odds are stacked against you if you're planning to day trade. People who day trade can make some insane gains, but the amount of people that lose when trying to day trade is so high. I think the statistics are between like 80 and 97% of people will actually lose money when trying to day trade. If you're starting out as an investor, there's a couple of things that you should remember. Firstly, don't get FOMO and don't feel you always need to place a trade. I can guarantee if you miss one opportunity, there will be another one just around the corner. Also, control your emotions. That is probably one of the hardest things to do. And also, don't get greedy with your profits. Work out when you want to cash out in advance of placing a trade. And then if it's really doing well, you can always reassess your situation later on if you think it can go further again. Unfortunately, lots of beginners fail. So if you're starting out, I would suggest to use the demo account where you won't lose your real hard-earned cash. Also, if you really must use leverage, this is a good place to learn how it works. Also, you should be realistic about your goals and how much risk you want to expose yourself to. I know in the past year, loads of people have done very, very well, but this isn't going to happen every year. And there is even a chance some years may end up in the negative, which has already happened to me once. So if you like this video, please give it a thumbs up and consider subscribing to my channel. For those of you who haven't signed up to Etoro yet and are considering signing up, there is an affiliate link below this video where if you do sign up using it, I will get a kickback which helps support this channel. So why not try with a demo account there before actually putting in any real money? Also, if you want to learn how Etoro works, I've got numerous videos on my channel about trading and investing and the Etoro platform in general. So please check it out and subscribe and press the bell icon to be notified of any new videos. If you've got any questions about this video or suggestions for any new videos that you'd like me to do, then please leave a comment below. It's been Ollie from Get Geek. Thank you for watching and I'll catch you in the next one.